All right, good afternoon and welcome to the end of day review for today. And today is Wednesday, October 23rd, 2024, and we are in the midweek. And if you follow the news today, so at 8:30 we can start see it sell off, and it's a big sell off today. If we look on the 1 hour time frame, not 1 hour, but daily time frame, it will not be surprise at all because it's a short setup, right? It, before we go to the chart, keep in mind that we are in week 43 and we have 52 weeks for a year, so we have 9 more weeks to wrap up. And we are in this week right there, October, and is the first month of the fourth quarter right there. And also October is the earning reporting. October, July, and April. So those are earning report. Basically, that's January, April, July, and October. Those are month have running report right there. And for this month, remaining day of this month, we're looking for the GDP data on the 30, and then the PC is on the 31st. All right, and we don't have any FOMC meeting for this month, but we do have the FOMC on November 6 and 7. It only for on Tuesday and Wednesday. Yes. Oh, in this case, 6 and 7. Wow, it will be on Wednesday and Thursday. Surprise. Normally, Fed meeting is on Tuesday, Wednesday. The midweek right there. Anyway, now we go into the charts, right? See what we learned today, what opportunity that markets provide to us. So you see that the huge sell off today, but you see the level right there. This level, the high of this is 68. So you test above twice. 1, 2. So you break, test from above twice, and it break it. It break very hard today, and that's exactly the setup we have in our playbook, which is a 4 breakout reversal type 1. So here's our playbook to trade the reversal type 1 right there. Basically, it breaks, test from below, and reverse. Or that's the long setup. For the short setup, we have break, test from above, and reverse. Remember, if it tests above more than one time, that means the reverse gonna be very strong, very fast and furious. That is exactly happened today on October 23rd on a Tuesday, on a Wednesday. Is it Monday, Tuesday? All of that set up in our setup. This short right there. Remember yesterday the sell off during the pre-market, but during the regular trading hour it rallied back. But today, I mean the setup, the short is happened during the regular trading hour. So that's the quick, and that is a subtle detail different between today and yesterday right there. You see that? So you see that it's test from above, it break, test from above 1, 2, and reverse. So it take a couple of days for it to build liquidity, and then boom, it flushed down real hard for today. So basically, we check the screenshot of this. We can see that that is the reversal type 1 that we are talking about. All right, let's do the annotation right there. Basically, you have a break right there at that level, and then you have test, and then it reverse. So it's a type 1 reversal right there, right? You see that break, but in this case, the test from above is 1 2, so it's about 2 candle away from the first time it break, and that's okay. I mean, because they may need time to build liquidity, so that maybe take longer, but the perfect one will be only 3 candle, right? You have break, test from above, and reverse 3 candle like this. It's the simplify. There's some variation. In this case, a variation right there. So you have break, and the level is right here, the high of this candle. So the high of this candle gonna be 68.25 right there, 68.25. So basically 58.25. So for breakout 58, 68.25, and that what if for breakout it create a reversal? And in this case it's type 1 right there. And the first step you have is a break. It break that level. In this case, it break to the upside, and then you have test from above. In this case, it do twice, 2 times right there, and then you have reverse. Note that note that the test from above it happened on Monday. I mean, they build liquidity, they build up liquidity on Monday and Tuesday, and then boom. And then the step that reverse is on Wednesday. So they take 2 days to build liquidity. So that's an idea right there. Take 2 days to build liquidity. Yep. So we have break, and this break happened on what day? Let's see what day it happened. All right, so it happened on October 16th. Which is, let's see, last Tuesday or last Wednesday. Okay, so let's see, let's check the calendar. October 16th, so last Wednesday. Look at that, that's Wednesday. Right, last Wednesday. Yeah, right here. So last Wednesday, October 16th, right here, last Wednesday. It break, and then you have a Thursday, it take out a buy side right there, perfect setup. And then you have Friday, right? And then boom, start Monday, it give us a signal right there. Yes, so very critical for sometimes we have to distinguish between the signal and the noise. Sometimes the market send a lot of noise, which is a false signal. And it will trap people who get it wrong, and then the huge signal gonna come down. So that is the setup right there. Break, right? It's last Wednesday, and then it takes 2 days to build up the liquidity. I mean, actually 4 days if you include the Thursday and Friday last week, but 2 days in the sense that it tests the level down there before it break it. So test from above before it break it. So number 2 is gonna be test from above. In this case, it's 2 times right there. Yeah, 2 times. Let's move it up here a little bit, and then you have the remove, right? This is just a setup, and the remove gonna come. It will reverse. When we start trading, we saw the pullback right there. We thought that it's gonna go long, right? Because oh yeah, the buyer step in and put the price up, but it's not. It's just the algo manipulate right there. Basically, it try to seek the sell side liquidity, and then boom, is pull back to attract more people going and buy it, because it needs the buy side liquidity. It needs the sell side liquidity in order to move lower. And how to do that? You have to retrace back, and now we can see this pattern. You know, we do much better now in identify this kind of setup right now. Or let's save this for now. It's very obvious that they build liquidity for the huge sell-off on Wednesday, which is today. They build up from Monday and Tuesday right there. You know, look back, we can see that. Alright, let's close it there. And here's what we do this morning when we start out. We did take the screenshot right here. You see that? And you see that? So that's the level that it's gonna break. You see that test for the last 2-day trading day, Monday and Tuesday, right? Test the level 68, 58, 68, 25 right there, and boom. But the difference, just keep in mind the difference is that yesterday it broke down all to this level in the pre-markets, and then when it go into the 9:30 open, it retraced back. But today the story is the opposite. It break during the regular trading hour. I mean that yeah, in the pre-market it did also break down. So basically the 58, 68 right there, actually, yeah, you know, it all the way here, it opened right here, 8:30. Yeah, it did not break before the pre-market. You see that? It break during the regular time. But you remember yesterday, it break before the markets open at 9:30. You see that? It already broke at 9:30. Just start slowly, you know, moving backward, right? Moving in the reverse direction right there. So it's a very critical detail that we need to keep in mind. For next time when we see the setup, we recognize right away that the huge sell up gonna come on Wednesday. Boom, right there. You remember yesterday we did take a short right there overnight. We let it run overnight and it hit the target. Almost 4 hours right there for us right there. $8,000 right there. But for today we did not, because we don't know. We're not sure how we enter them, because we know they're gonna break down this level, right? But we don't know how we enter here. Well, yesterday when we see this, we don't know. But now we know that when it at the end of Tuesday, we see a so-called double top right here, right? And then it opened low on the 18 hour. Then then in the London section, it create a retracement right there. So basically, it consolidates an expansion. I mean, it's a down move, right? You can call that. It's retracement, go to consolidation, and then boom, it's expansion. Or you can call it, retracement in London, and then boom, it make a second leg down, boom, right there. And at 9:30, it sell off. We did short right here, but we get out early. We should stay in that trade and rip the whole thing right there. And we make a couple of, error right there, mistake right there. And it provides a huge lesson around here. We're going to show the trade we took and the lesson we can learn. But at the 9:30, you see right there is this the 9:30. We see how nice it is. If you don't know anything, you look at the 9:30 candle, you still have a beautiful setup right there. You see that? It's a break, right? And then it tests from above. You see that? It tests from above and you got to reverse. Yeah. This is gonna reverse, right? So if you put a sell stop right there, you still have a huge run right there. Right, if you sell stop at the low of this, so you reach above, more than an hour, right there. Yes, 7 point is, 1 hour and 1/2 hour, 1/2 hour. So 1.5 hour, but you have a huge run right there because huge liquidity out there. Yes, that's a huge liquidity, 60. Wow. Yeah, we totally missed that trade because no, we can saw the trade we take and we discuss more detail, but we want to talk at a high level right there. What else we see today before we go to the trade? Yeah, so basically when we see that it gonna break down this level, but we not sure how to entry in the pre-market, yesterday. I mean, we did today pre-market is in yesterday evening. So we're not sure. So when we go here, right here, we short right here also. We short here very good right there. We put our stop loss right there, but some reason we got chicken out, and then we mess up the whole thing right here. That is the huge lesson we need to learn. Yeah, where is okay? Other so here's our analysis before the markets open at 9:30. So basically, we see this is holds like consolidation right there, or retracement go to consolidation, and this move is like expansion move, and then it's make reversal right there, expansion or yeah, you can call it a retracement and then make another leg down right there. It's got expansion right there. I think it more accurate say expansion. And then right here it act like consolidation right there, and then it gonna expansion. So I make another expansion down. When we see, yeah, so expansion down, and right here we anticipate reversal or retracement, but that's the mistake we make. It's too early. Don't think that it can happen right away. It may make another expansion move down. And we anticipate retracement reversal too soon. We got top out right there. So look at the recording right here. Start at the 830, right? So you see. Yeah, really short right here, but we put a stop loss up there. If we are stay in the trade and get committed, we have a huge run right there, 60 point right there. It's like 10R. Yeah, because it's gonna break this level. You remember we put right there the 68 level. We know that it's gonna break, but we get, you see the pullback right there. It does not mean that it's gonna retrace. It's just a setup before it make a huge down move. Yeah, you see test level right there. It tests that level, and we did make understand the market right. You see right there at 9:30. Yeah, it happened very fast right there. You see at 9:30. Yes. So stop right there. What do you see? Well, we thought that it's gonna be a long trade. We thought it's gonna be a retracement and reversal, right? That's an idea right there. Retracement and reversal. And we said, wow, look at this level. You see that break test from below? Oh, it must be reversal. Type 1, right? Type 1 reversal. Type 1 reversal right here. Break test from below. But it's not working in this scenario. We go long and we got, we got run over, basically. Wow, it looked like so strong for you, right? No, it is set up to go short. But it's gonna break the level, because if you look on the daily time frame, it's gonna break. It tests both already. So whenever you see, then there's no reason for it to come back to this level. The only reason come back is to break it. Keep that in mind. And it did. You see that the 915 tell you that it touched that level, it will break it. But at that moment, we so caught up, we didn't step back and thinking. We just jump right here. We go long because the FOMO. I think the FOMO really taking over our mind at that moment. So we go long and we make mistake. That's which way we have to see where it is the trap that the market set up. It set up a trap right here. So whoever go long gonna get run over, and we did. That's some was, I think sometime ICT said that you have to know the buyer's direction. Otherwise, you have to know where the liquidity run. Otherwise, you become liquidity. That's exactly correct right there. You see that? Look, that who thought that it's gonna be a setup for short? We thought that it's gonna reverse. So that's the reason why it's very important to know between the difference between the noise and the signal. This is not a signal. We thought it's a signal to go along, but it's not. A false flag is a false flags or a trap or a noise. It's not a signal, it's a noise. And then boom, you see that feedback right away, and boom, you see that it touched the level one more time. We thought, wow, maybe it failed to break the level, and then we try to short them when we see flip, and then now come back. We try to go long. So when we go to the trade, you're gonna see that we make a lot of mistake, and we learn a huge lesson. See that? It back and forth, back and forth. So the 930 is a very, very tricky, tricky in the sense that if we just follow the emotion back and forth, but if we're thinking with a clear mind, without a FOMO, we know exactly what the try to right here. They set up the sword. And look at the follow-up right there. Boom. Well, we anticipate, we thought that it's better, right? Now you have a test from below twice, right? Break test from below twice. So this one gonna be a huge explosion. It looked like the first, looked like the first 4 minutes, it looked like explosion to the upside. But that is the noise. That is the trap. It's not a signal. Yeah, you see that? Right there. That tells us get ready and short, my friend. Not go long. Not go long. See that? Yes. So now we say, wow, now it's perfect short. Perfect long, right? It tests from below twice. So this has to be a long setup. And we go long, we get stopped out right away. You see that? Boom. Wow, look at that. Look at that. Yeah. Yes, the market move very tricky. We have to see where is the noise. And you know what? When it come down here, we short them, right? We flip, we short. And then we just run over here. When it pull back, we scared. We thought that, wow, it's gonna flip too long. And we get out the trade. And look at that. If we stay in the trade, we hit our target. You see that? Boom. Yeah, we get our trade early. You can see the mistake we make. But I want to review this. We want to review so we can see how it happened in real time. And boom, right here. Look right here. Okay, so right here we see that is a reversal type 1, right? At this 68, right there, we say, oh, brace test from below and then reverse. Perfect. So time to go along all in. You see that? The type 1 right there, break, test from below, perfect. And what is the timestamp? Yeah, 10:30. Time alignment also, right? So who thought there's gonna be a trap? But look how the beauty is. So we thought it reversal, so we go all in right there. And look at that, we're gonna see. You see that? Who thought that? So we learned the huge lesson right there. We should not. Yes, you see that? We thought, wow. Yes. So right there, you see that it did take the high of this candle. That should be our get out right there, whole low hanging fruit right there. In case it flip on it, and we did not do that, so we still then trade, and we pay for big price right there. And you see how this candle got flipped, and that's exactly when we are realize that it's the whole thing right here. It's a setup, so you have an expansion, and then you have retracement, and boom, it's a huge expansion down move. The moment we realize it's too late because we run out of bullets. You see that? We run out of bullets. Yeah, it's huge down move right there. And you see this level? It's just a trap right there. So it's on 1 hour time frame. It breaks that level right there. So let's see that the trade we really took. Yeah, so here the trade we take the short rate. We just do a actually a FOMO right here. We saw a huge, we want to catch the momentum right there. But if we stay at this trade and let it run, we still have a good day right there. But we just aim for a short move right there. And that's the lesson we learned. From now on, we're not gonna take this trade. We have to have a conviction, need to have where the liquidity are gonna run, and stick with that for long run. Don't just take a quick profit right here. You know, it not bad to take quick profits, but it really create a different mentality for us right there. You see that? We take early, but if we let it run, yeah, we still have huge profits, but we need to have a target, a career plan right there. Yeah, that's the first trade we took right there. All right, now look at the one that we did later. So now it's go to 9:15 right there. Okay, so perfect. All right, the idea that, okay, at that moment we look on the daily time frame, we say, okay, let's go in short. It will break this level. That's our idea right there. Perfect. All right, let's do it. Just go with one side and then add more when it goes to our direction. That's a good idea right there. Perfect. But we change our mind. That's very tricky right there. Yeah, you see right there, we try to move our stop loss. You know, we get chicken out right there. It's just one side. Why we try to do that? To keep our original right there, so we move to 58.72, right? If we leave it there at the beginning, so 75 and 78, go back to the charts right there. 78, right? If we push 78, we're still in good shape right there. You see that? But we move to 75, right? So right there, 75, it's still good. I mean, we move 75 to good because the high of the pullback right here on the 930 is still 74. So it's not hit that. Yeah, so just hit right there, just let it run. For some reason, we forgot our mission right there. And we moved down to 72. Come on, man. Don't move that. And we learned a huge lesson right there. We have an idea, right? We execute a trade, but we change our mind in the middle of the trade. Yes, sometimes you need to change change your idea when the condition in the market is changed. But in this case, the thesis is still there. I mean, it's very hard. I mean, how do you know when to change and not to change? It's okay. It's a process. It's a journey. We have to go there. We have to go through this, and one day we will come out strong. We will know exactly what to do. So to give ourselves some room to learn and to make an error, so it's okay. But anyway, if we leave it there at 75, I think we can reach the target easily, 5R right there. But for some reason you see that is when the 930, because it moves stop loss too tight. So as soon as 930, it take it out right away. See that? That's and then right here, we try to short them after the 930 flip. Perfect. So leave it there at 75, right? Did this guy come back at 75? Yeah, 74.25. Okay, so we're satisfied. It's perfect. We try short again to leave it there. Then we still have a good run, but you know what? We make errors. We get scared, and now what? We turn into long. Can you believe that? How chicken we are. Yes, we don't blame ourselves either, because look at that. You see that we thought that it's gonna be a reversal. We need to show you earlier. We thought reversal. That's our thought process right there, and that's is it. The huge lesson we learn. We have to distinguish between so-called a noise. It's just the noise right here. It's not a signal, and we mistaken thought it's a signal to go along. So it's a lot of false flags right there. We have to learn. And how do we learn? To keep practice, keep make mistake, because that's where we learn from experience. There's no other way. So the way to successfulness is through failure, through make mistake, through frustration. There's no way around that. Yeah, the most lesson we learn when we fail. So should be go easy now ourselves right there. Yeah, and then we short them, and then we do that when we first get frustrated, we increase the size. We get mad at the market right there. We increase the size. That's crazy right there. That's so emotional right there. Emotional right there. And then we short them, and then we go long. You see that? And then we short them right here, and it almost hit our target right there. You see that? And then it pull back, we get scared. We don't know what to do. So you see that? And then we move the stop loss close to here, and I think we get out early. If we let it run, it hit our target, then the next right there. And now we try to do FOMO. We short them, and look at that. We get stop out right away. And we try short them again, and you see it's a mistake. It pulled back from here, and you know what? From there we go long. We say, "Wow, now it's reversal." We go long, and we had a huge mistake. We should just aim at this. We aim all the way there, and look at this. Boom! We thought, "Wow, we got it right now. We're gonna get this target." Who thought that it's gonna be flipped from here? But now look in the hand side, we saw all of that. It's just the noise. The real signal is right here. When this candle got flipped, yes, this candle flipped is the real signal to short them. The moment we know that, you see that the huge profit, we should take profit right there and wait for the real signal right there. Profit up to 3,000. Yes, right there. The reason why, because we lost too much, and we just want to get it back. That is what we're thinking at that moment, and that should not be our approach right there. If we got at this number, we have to look at the liquidity. Don't take our eye off the liquidity. We need to take our eye off the number, the profits or loss. It really distracts us right there. It make us make a very bad decision. You see that when this flip, yeah, we should move into break even or go get out, take for get out, but we did not. You see that, and we just heal out right there, and that's too late to learn that it's gonna be a second leg down right there. So that's a huge lesson for it right there. Anyway, thank you for your time and interest. We're grateful for the opportunity. We do what we love, then success is coming our way. Day by day, little by little, we're getting better and better. Bye for now. Have a great night, and see you tomorrow.